Good morning, everybody. It is Tuesday, March 18th, 6:20 a.m. over on the East Coast. My apologies for being a little bit late today. It is what it is, but I have for you here a view of the futures, and as I was getting ready to get started, futures were okay. We had obviously that drop down after the highs yesterday. A little bit of a bounce after midnight going into this 4 o'clock, 5 o'clock in the morning period, a little bit green. And then we have just suddenly, after some Germany data came out, taken a slight turn to the downside. As of right now, the NQ futures are down 95 points. The ES is down 21 points. The YM down 150. And the Russell 2000 down 16. So we will leave off with that and go quickly over to what we're looking at here. And ta-da! You got your data. You got your data. Your data with the SPX weekly candle being this 56.35.60. The trade was already in your email there on your Sunday email. So that premium will not really fluctuate too much because it is a Friday expiration, and you still have the big mama coming tomorrow, the FOMC, which later this morning, after things get settled, I will get you out your FOMC preparation email. But it's the same message that it has been for the better part of 3 years. So keep it to what it is. But yesterday, 57.03.52, missing last week's open by 2 points. Not significant, but something to be aware of. But more importantly, you just had your first ever 2 green closes in a row since we placed the all-time highs back on the 5-year anniversary of the COVID top, right there on February 19th. First time we had 2 green closes in a row. And bring it over to the SPX spreads, back to back plus 1% days. Friday, we closed well above plus 1%. Yesterday, we visited plus 1%. Not that visiting or closing is of any significance, but again, plus 1% days back to back. We haven't had that since the very beginning of the year in January, which is where we put in that high at 60.21, and then we sold off for a week down to 57.73. Down to the January 13th bottom, which you all remember being both the full moon as well as being where our target was. So what happened? You got a nice day. You got a nice little bounce day. I saw a lot of you performed very well yesterday. I congratulate every one of you. On the QQQ, again, back-to-back plus 1% days. Nothing of significance. Back-to-back green closes. First time since, again, when the COVID top was revisited 5 years later. As far as the date, not the price, the date being 5 years since COVID and the all-time high was placed. First time we had 2 green closes in a row. But again, you did have 2 plus 1% days in a row. 2.61% Friday and 1.29% yesterday. And the meaning of that is, without even having to look, is plus 1% 2 days in a row. We probably got a little bit overbought. And that's exactly what's taking place right over here. Over on the IWM, same story, same thing. And again, minus 200 has cooties. Minus 200 has continued to be a very nice play off of that bottom being below 200. But this is OPEX week. It's not only OPEX week, it's quad OPEX week. And quad OPEX weeks will rip you to shreds, even if you're a professional trader. So be very, very, very cautious as you look at this from a week point of view. And I haven't thrown my data in there yet, but because I am a little bit retarded, I needed to put my little black border line over there. So I will fill this in as we get going. Actually, today I can do it, and we'll show you how hard it is to do. Close over close. Wait, is that what I'm looking at? Yeah, close over close. That's exactly what I'm looking at. Plus 36.18. So let me go over here. paste, and then no, it's got value, paste only the value, 36.18. So there it is. I have it recorded. A green close on Monday. Nothing of a pattern looking at Tuesdays, but again, something that we'll be tracking. So anyway, I get off of this and get over onto the charts. And where are we? Don't need the futures, but I will scan over here with you very quickly so you can get this done. Looking here at Friday, March 7th, where we created that weekend gap, where we gap below the 200-day moving average. Nice bounce, great bounce, 23.6 retracement, broken yesterday, nice bounce, but we proved nothing. Nothing has been proven, nothing whatsoever. Come back over to, like I was saying there, with the view, looking at this from a count point, from a wave, numbers, everything. 9, right there on our bottom, possibly this being the 10th, and possibly getting one more move to the downside for that to be the 11th. Now, how does this get disproven? Well, very simply, break above the 200-day moving average, break up above the Friday, March 7th highs, that being here at 57.83, and we can start removing this possibility of an 11th wave to the downside, and we can go over here and identify 5504.65, hashtag full moon bottom being our placement, which we don't want to get a little bit too confident with, because it could very well be this was moved to the upside is our full moon top, because like I said, the drawing's a little bit skewed because I drew my arrows at the wrong angle, but you got your move to the upside, which we would still like to see move up and fill this gap at 57.70. Not required, just looking at this from a display point of view. And then our dip to the downside, which we don't want it to be down below where we've already broken, which you know your level's at, which you held yesterday. And then a move to the upside. And that, again, should be a repetitive move like we have seen on virtually every major bottom without a 100% catalyst, and the FOMC meeting is tomorrow. So leave that as it is. Looking here at your, again, the 1 hour chart. Yeah, that's what I was showing. We did not get into, oh my God, overbought, but again, because we had beat the hell out of this RSI on that work on the way down the last week, we're back to the 10-day moving average. We're above the 5-day moving average. First steps in the right direction, but we have not proven anything. So I bring you over to your QQQ. QQQ, nice move up into that weekend gap. That weekend gap from March 7th. March 7th weekend gap. Got back up into it, but came right back down to that 480.70, and that 480.70 being the first step into the right direction. Nice, but still, we haven't proven anything at all to be confident with on the move up. Looking at it just from a very simplified view, like I've shared before with the NDX, nice little AB, 161.8 for the C. Looks as if it is a very nice completed correction, finished with, done with, but we still want to see proof. Proof is going to be reclaiming back up here above 504. So that's a lot of work to get done from 480. We're talking about 20 points to the upside, 2 gaps to be filled to the upside before we can be 100% confident, yes, okay, this is definitely headed into the right direction, into that wider view. So I bring you on here to DIA, which I didn't cover over the weekend, as well as QQQ. I brushed on it. Again, view coming down here from the August bottom, as you can see here, a lot stronger, fractionally making contact with minus 10% on this correction that we had coming here in January, February, March. Nice little move, but again, all we're doing here is at 420. And 420, this 420, 425 area is a congestion zone. So to see DIA back up above 425, with the 2024 close being at 425.50, that would be your first step into the right direction and start looking for those June, July positions. IWM, 200, minus 200's got cooties, minus 200's got cooties, and, well, nice move. Back to the 400-day moving average, holding above that 203.69 for the moment. But again, lot of work, a lot of damage taking place with this minus 20% correction on the IWM. A lot of damage over there, and you are going to need a Jerome Powell. No tariffs on April 1st, April 2nd from Trump. 207, 208, most significantly back up above 213. So a lot of work still to be done. And I will leave you off with, which I do not believe, first and foremost, you can expand, go ahead. The September 19th QQQ 540 calls from March 13th. Got into them at 8:08. Peaked yesterday at 11:17. Granted, 1050 is your plus 30% level. So check mark. Put it in the box that you have your 50%, 30%. The VIX had a nice hovering around that 2102, and then you finally faded off there right around lunch. We're back to 2102. We want and we need, nope, that's not going to work. We're going to need to go a little bit wider. We need to see the VIX vacate 2102. And by vacating, what I mean is making a move down below 1811. And then all that does is give us a little bit of a warning saying, okay, at least we're getting the bearish bounce. That's for damn sure. But until we start getting that VIX back below that 1622, it's going to be a cautious period for everybody. And it's quad OPEX, so that should not be a message that should be disrespected in any way, shape, or form. Like many thought that because of the plus 90% day you had there on Friday, that you were going to get a turnaround reversal yesterday. So anyway, guys, I apologize for taking up too much of your time and being a little bit late this morning. 6:30 as of now. I'll try and get this out as quick as possible. Have a great Tuesday morning. Enjoy every single moment of your day today, because you're worth a hell of a lot more than $1 million. Trust me when I tell you that.
Mama just killed a man, put a gun against his head, pulled my trigger, now he's dead. Goodbye, everybody, I've got to go. Gotta leave you all behind and face the truth. Mama, wanna die. I sometimes wish I'd never been born at all. I see a little silhouette of a man. Scaramouche, when you do the fun, done go. Thunderbolt and lightning, very, very frightening me. Magnifico. I'm just a poor boy, nobody loves me. He's just a poor boy from a poor family, sparing his life from his monstrosity. Easy come, easy go, will you let me go? Build a wall, no, we will not let you go. Let him go. Build a wall, we will not let you go. Let him go. Build a wall, we will not let you go. Let me go. Will not let you go. Let me go. Will not let you go. Let me go. No. Mamma mia, mamma mia, mamma mia, let me go. Beelzebub has a devil put aside for me. For